Welcome to a new update, and today we're going to discuss macro events and Bitcoin once again. In the coming few days during Christmas, we're going to do some altcoin charting as it's that time again to look at how those are performing. Today we're going to focus on what the big events are actually going to consist of, as today is the first of 2 days which is providing big data. Before we continue, make sure to hit the like button, subscribe to this YouTube channel, also check out our free trade letter which you can find in the description beneath. 3 times per week the latest information about the markets, solely focused on crypto, but lately we have been adding macro and we've also been adding forex trading to our premium membership, and in January we are going to launch copy trading so you can follow my portfolio and that of the traders. If you join our premium membership, you can't copy trade it without the premium membership. That's why we got the 30% discount until the last day of the year, which you can find in the description beneath. Today we've got a big macro event day again, pretty much the final ones before we're going to kick off with 2023. And today it was the time for Great Britain to bring the GDP, which was worse than expected. The forecast was 2.4%. The actual number is 1.9%, and also the quarter-on-quarter data is worse than expected, as you can see here. Now, what we're looking at when it comes to more important data, and it's already coming out after we've been shooting this video, is the actual case of the PCE prices, but also GDP, which is a reflection of what the GDP number from a month ago is already consisting of. So we're looking at the number, whether that is going to be in line with the expectations of what we were projecting a month ago. If the GDP is going to finalize on a lower number than expected, we can see that the economy is slowing down. Next to that, we also want to see the GDP price index to be coming in lower, because that states that the inflation is still falling down. And what we also want to know is core PCE prices of Q3, and we want to know the continuing jobless claims, because the expectations are that the jobless claims are going to crawl up in the coming period, based on the fact that unemployment is simply going up. We hear it everywhere. Tesla is also a case where people are going to be laid off. So more and more companies are going to lay off people. We can see that the continuous jobless claims are constantly just running upwards since we've hit the low in September of 2022. So we've went from 1,347k towards 1.67k, and we are looking at a forecast that's going to crawl up. But I think that the numbers are going to be starting to run in higher than expected in this case. So that's what we're looking at, especially if you look at the previous recessions. We've been seeing the numbers starting to run up quite fast, and that is also an expectation that we're going to see with the price or with the jobless claims as a whole right now too. Then what are we looking at even further? We are looking at the DXY, which is currently still trending down. If the number is going to come in positive, so the GDP comes in better or PCE comes in way higher than expected tomorrow, we are going to see a breakout taking place on the upside of the price of the DXY, which means that we're going to take out this high, reverse this trend, and have some relief. On the other hand, if the GDP is going to kick in worse and jobless claims are going to be rallying higher and PCE comes in lower than expected, this one is going to continue having this fast fall towards 100 points, as that is the best or the next level of importance to look at. In that way, what are we expecting for Bitcoin? I think finally volatility starts to kick in with the data jumping in. However, it's still holiday season, so most of the price action is going to be relatively boring. What we're looking at, we are into a narrow range for approximately 5 days already. We are in this sideways period. We are actually into this sideways structure for a few days now, in which the crucial level remains to be 16.6. I think that once we're going to fall beneath the level of 16.7, it seems likely that we're going to have a test of 16.6k taking place, through which we can see whether the buyers are stepping in at that actual level. If they do, we can see continuation to the upside, and then I'm expecting to see a run towards 17.4 and approximately 17.7, as then clearly the trend is going to remain to the upside from this last low. On the other hand, if we are going to have a fall beneath 16.6, you have to start zooming back out, in which you can conclude that we're taking out this low looking at a retest of 15.7. And I think that if we're going to get that stage, or if we're going to have such a correction taking place, we are looking at a sweep of this low, and then all the Wyckoff charts are going to be in your face, screaming that we are currently bottoming out, which I think we are, but then we get a clear confirmation. So if we are losing 16.6, I think the odds of sweeping the low at 15.5 is going to be significant. And when we do see that drop beneath 15.5, I think that's going to be a serious sweep, looking for liquidity and also buyers stepping into the markets. As in the end, we are looking at a falling wedge structure for Bitcoin that you clearly want to see breaking out in 2023. And once we do break out of that, we're going to have a rally towards 35k. So right now, core focus is on jobless claims, the PCE, GDP, and then we can see price action happening on the forex pairs, in which Euro USD is going to have a significant move, DXY will be, and then Bitcoin will do the exact same. I'll be back tomorrow with a fresh new update. Make sure to subscribe to this YouTube channel. Check out our free trade letter, and I'll see you again soon.